Welcome to Real Estate Wisdom Podcast, episode number 3. Yes, we made it. I'm your host, Vishal Kapoor, and today we have a special guest from Wine Group, and we will unlock some mortgage wisdom with Tyler Lipinski. Tyler's journey in the world of mortgages is truly inspiring. He's gained extensive knowledge from his experience on the lender side of the mortgage process and has developed a strong passion for helping clients personally. In a rapidly changing mortgage landscape, wisdom and expertise are invaluable. At Wine Group, they understand that securing a mortgage is more than just an interest rate. It's about creating a financial solution tailored to your unique needs, both short-term and long-term. Tyler's belief in the power of knowledge to build lasting relationships aligns perfectly with Wine Group's mission. He educates his clients on every step of the way, ensuring that their mortgage plans are built on a foundation of hard work and honesty. Now, let's dive into the questions we have in store for Tyler. We will explore the current state of the mortgage market, the types of mortgage products available, how interest rates impact affordability, and much more. Plus, we will delve into the challenges and opportunities presented by recent interest rate hikes and variable rate mortgages. So, welcome, Tyler. Thank you for coming over here.
Thank you for having me.
Appreciate that.
Yeah, absolutely.
So,
I'm happy to be here.
How's your dog?
Dog is good. We were just talking about that earlier. I was showing Vish some pictures of my dog. I've got a bulldog. He's awesome. He's a really, really good guy.
I love that story, what you're selling that, but unfortunately we haven't started the recording, so that's fine. That's the podcast is about, to knowing each other. Yeah. And I know I always think you were smiling, so I asked that question as well. Are you married?
Yeah.
And
nope.
Still not?
Still not. Still not.
Like 2 minutes before you were not. So.
Yeah, still no. Looking for a mom for my dog.
Oh, I got it. Here you go. So anybody, he's a good-looking guy, so
there you go.
Probably will give the number later. He might have a personal number different, right? So anyway, thank you so much. I know you help many realtors in our brokerage. And when I attended your presentation with you and Hugo,
yep.
And it was, I know so many mortgage people, working 11 years in the industry, and I work a different one. The most important thing for me with the mortgage agent is they respond on time.
Yeah.
Everybody's busy.
Yeah.
What I notice, when people starting the business, they're reaching out to realtors all the time. Yeah, we can do this. And first thing what they say, you know what? We have the best interest rate. In any difficult situation, let me know.
Yeah.
And we can help you. So for me, it's very important because if I'm referring somebody, for me, it's very important is they're getting taken care of.
Yeah.
They have the same standard what I have for my clients.
100%.
Okay?
You want that relationship between mortgage agent and realtor to be seamless.
Exactly.
And to have the same experience for the client overall, right?
Yeah.
Because if you're operating one way and I'm operating another way, and then you try and mesh the two together, it doesn't allow for smoothest transaction flow possible, right?
No.
Where if you and I are both aligned in terms of helping that client from start to finish, it's going to be the smoothest, seamless transaction that you can have, right?
Yeah.
But yeah, no, I think that was, there was one thing that we were talking about earlier as well, Vish, was having that relationship from start to finish so that the client feels that they are protected almost.
Yeah, they also feel like they're dealing with one team, right? They're not dealing with 3 different people. They're dealing with who have no idea.
Yeah. Well, this person
going.
Operates that way. This person operates this way. It's
exactly.
One-stop shop is really the way that I like to look at it, right?
For sure.
And we talked a little bit about process as well, which I think is really important for a lot of clients and viewers of the podcast to understand.
Right, yeah, for sure.
Is how does that mortgage process even work from the beginning, right?
Yes. So while you're taking my questions, okay?
Okay, well,
but I'll let you start on that because you want to take the lead. That's fine. And that's the first thing, what I tell my clients as well when they approach us, thinking of buying or selling, even selling. I ask them like, what's their future plan is? Have
Yeah.
they consulted their mortgage agent?
Yeah. Yeah.
Right?
Yeah.
That's my first question.
Yeah, and it should be, and that should be the standard for every realtor, in my opinion. Is, have you spoken with your mortgage agent? Do you know where you're going to end up on, in terms of purchase power, and are you confident in their ability to assist? Right, and those I think are really, really important questions to ask, and sometimes they're not easy. And as a mortgage agent, we have to ask those difficult questions all the time, because, like you said earlier in that beautiful introduction, it's not about the rate really right now, especially right now. It's about the solution, right? We have to ask our clients sometimes, where do you see yourself in 5 years?
Exactly.
Which is not necessarily a question that a lot of mortgage agents might ask, but it's one they should be asking. Where do you see yourself in 10 years? Right? Again, very difficult questions to answer, but the more information and knowledge that I can, develop from the client that I'm dealing with, the better. And the more of a customized solution I can create for that specific client, right? Having a client that says, I'm going to stay in this house and raise my family for the next 5 years is going to be a completely different solution than somebody who says, I'm probably going to sell in 2 years. I know I just need to live here for a short period of time and then I'll be on my way, right?
Right.
So it really, really depends, what are your goals? Where do you want to be? And then my job is obviously, how can I help them accomplish those goals in conjunction with great partners like you, right?
Oh, for sure. Like, and that's one thing, like I educate my clients as well and learn from you guys, like, how you do business and what you expect from us. Yeah. So we prepare them from the starting so you don't have to do it, right? Still you have to do it because we align that way.
It's made easier though that way.
Yeah, but my first question, like, some of them, like people who bought it before or even like a new one, because they heard from their friend, they got the rate this, and they were first thinking, does he give us like the best rate? Yeah. I'm like, yeah, always. That's what their job is. Like, that's a difference between the mortgage broker and somebody who is doing from the bank, right? Exactly. But even like the banks, ones are pretty good. Like, they will advise you correctly. I have the great relationship with all the banks actually. And I keep that was like, it's not, that particular one person. I keep like those in my database because sometimes is also the personality and also looking into, some people can't understand. They're probably speaking second language. For sure. So I keep those ones over here. So in that way, try to make it like more comfortable. But when people ask about that, like the interest rate, and my always question is like, is that the only thing you're looking for? Yeah. What about other?
But it happens though. And it happens where clients will get almost blinded by, because let's be honest, there's been a lot of media about mortgages and interest rates in Canada over the last, call it 2-3 years. Right?
Well, we got highlighted on national news, CBC Marketplace and all over the place, and few people who made us even work harder to prove ourselves that, we are not real. All the realtors are same. Not all the mortgage agents are same. Not all the lawyers are same. So everybody is different. So you cannot just put that, and it feels sad at the same time. Because they belong to our community, right? And if they're doing that kind of stuff, mortgage frauds, real estate frauds, and I heard probably the news like last year it was, right? Somebody whose home was sold. And they had no idea. The owner have no idea their houses got sold.
Crazy.
And that was like a realtor was involved, mortgage agent was involved, lawyer was involved.
We talked about that example earlier in your office today. Right? People going door-to-door salesmen. Right. Taking advantage of the elderly, right? There's so many different ways to get taken advantage of in the real estate world, and partnering with real estate agents that know their stuff and know the area that you're working in is huge. Partnering with mortgage agents that can help protect you against some of those things and red flags to look out for. Like, I'll be honest, one example too is I have some clients that will reach out to me because they had gotten their mortgage done with a regular bank, and they've never really spoken with a mortgage agent before. But let's be honest, again, mortgage agents are becoming more and more popular, right? Not everybody is walking into the bank and saying, I need a loan. What's the best you can do for me? People are getting out there more and introducing themselves to mortgage agents and having conversations with us, which I think is so important, because you could be leaving so many opportunities on the table.
Well, it's a good. Right? I think I have to ask this question, and I have in my list, but this is the question a lot of people ask. What is the difference between mortgage agent and mortgage broker?
The burning question that everybody wants to know the answer to. So I'll start off with a preface by saying that by no means do I talk negatively or feel negatively about financial analysts that might be mortgage representatives for different banks.
Like I mentioned, sometime it happens.
And they can be
I
great
know one
to
of my mortgage guy,
Yeah.
and he's a mortgage broker.
Yep.
And sometimes because you bank with them, you might get the better rate.
100%.
So you go directly to them, you might get better rate.
Could happen.
Guess what happened? That time, their guards are down, and they say, you know what? This is the person I trust. So building that trust, and that's what we're doing with our podcast over here, is providing that education, providing that value, and we are being neutral. I'm a realtor, but also, like I said, I want to be like a neutral.
Yeah.
There's a pros and cons.
Yeah.
Everything you have to look.
For sure.
And you have to shop around. You should shop around.
Getting
It's
a second opinion is so important.
Biggest investment of your life, you're doing it.
Yeah.
So you have to be.
Yeah.
And if you're not doing it, just by hearing somebody said that because they got that particular rate, and I was going to say that, because everybody's situation is different, right?
Absolutely.
So it's not like a one size fits all kind of thing.
No, by no means, right? And
Right.
there are some people that try to look at mortgages from that approach, and it just doesn't work out, right? Because, like you said at the beginning, finding that customizable solution is huge.
Yeah.
So breaking it down, what's the biggest difference between mortgage agent and the bank or branch, right?
Yeah.
The easiest answer is access to options, right? I think that right now the tick was anywhere from 65 to 75 different financial institutions that I can review your application for or the client's application for, right? When you're dealing with the bank or the branch, they're only going to be able to offer you the products and services and programs that they have access to, right? One of the biggest examples is, and I think we might talk about it a little bit later, and so don't get mad at me if I'm jumping ahead.
No, that's okay.
But for clients who are self-employed individuals, right? If you go to a bank or a branch, the most average or typical way to qualify a self-employed individual's income is by using their 2-year average of taxes, right? Tax filings.
Right.
Outside of the bigger banks, there's other lenders that will allow you to use significantly higher income in most cases by looking at bank statements instead of income taxes, right? And if you're at a branch dealing with a financial analyst to help, determine your purchase power, and you're self-employed, they might only say, well, this is what we can do for you here, and stamp it with a pre-approved letter, and that's what it is. Whereas if you speak with a mortgage agent, they might say, yeah, that bank was right if you go only with that bank. But if you open up the horizons to different lenders, we can now stamp it with a significantly higher pre-approval amount. Personally, I have, without giving away the actual deal, I've had deals where the bank said, call it 600, but another alternative style lender, maybe you can get up to 900, 950, right? So really, really does make a difference with clients, and the clients that are self-employed, they probably do have the extra funds to make the difference in mortgage payments. So
what I like about mortgage agents like you, that is not you being creative. Okay? You're looking at those options. It's not you're doing it it's the papers get made or anything like that.
No.
It is like being genuine. And finding the solution between those boundaries, right?
Yeah.
And that's what I really enjoy working with the mortgage agents like you, and who have that thing. I have the another lady, because you're here, I'm not going to name her, but she's my go-to. She started. She was new. I knew her it goes to the friend circle. And somebody give her the opportunity.
100%.
And she was on top of her game. She's I just talked to them. This is what happened. I'm sending the application to them to fill out. They're asking documents. Then what she's received. Then she also informed me, I got the documents. I have this thing. This is a process going on. It's probably take 2 or 3 days. So those kind of things, it's very important for setting that expectations. And I feel good about it because I don't have to go and work explain.
Exactly.
Other day it happens. I was just talking to one of our realtor colleague. What happened is the deal was done. It was a 5-day financing.
Okay.
And realtor didn't follow up with the client. And the client didn't submit their documents until the 4th day. Okay.
I'm so happy that you're bringing this up.
Oh my!
I have so much to talk about.
And the reason behind that, because the realtor didn't have the relationship with them. He doesn't have a direct touch, right? It was not direct touch. at the same time, he didn't remind it or follow up with the clients. Okay, did you submit it? Because clock is ticking.
Yeah. But
right?
so I don't think that the realtor should have to do that.
That's right.
And I'll tell you why.
Yeah.
Because I should be updating the realtor.
Exactly.
Or the mortgage agent should be updating the realtor with the updates on what's going on, right?
But he didn't know, mortgage agent didn't know that they bought the property.
Oh.
Right?
Oh, then that's a completely different situation.
I think that the communication gap happened.
Yeah.
They got the financing approved and then they sleep and they didn't tell if they are in the market and looking into and they're thinking it's going to happen.
And then that just goes to prove that what we were talking about earlier, having that connection is so important, right? Because the first thing, if you have a client that gets an accepted offer, what's the first thing you're going to do? Call me. Right. Let me know, or call the client's mortgage agent, right? And let them know that this is what's going on. We have until this time, and then that way I can reset expectations with the client, determine which lender makes the most sense, right? Because I'll be honest, sometimes if you need to have a quicker answer, you know that there's a lender that you're going to want to go to instead of somebody else, right? Yeah. Even if it means maybe getting 5 basis points discount on the rate, you want to have a lender that you can trust and that's going to give you that fast turnaround time to make the educated decision to waive the condition of financing or not.
Yes, absolutely.
But getting into that same topic is, I think the whole pre-approval, pre-position process is something that we were going to talk about. And if it's okay, I'd like to talk about it now because I think it makes a lot of sense in that conversation. What we do at Vine, and I can speak on behalf of a lot of our agents at Vine because this is really the Vine way, is to start off with the client and determine what their maximum purchase power is. Mm-hmm. We don't allow there to be really much or any room for error in the initial stages of our pre-approval or pre-position process is what we like to call it. Because I'll tell you this quick story too. I've had a client that went to the bank, got the pre-approval done, stamped with the letterhead. Client went out and purchased a home less than what that maximum purchase price was, and the bank declined it because they didn't do their due diligence on the credit side of things.
Wow.
So what I'm saying at Vine Group and with Tyler Lipinski Mortgages, what we do specifically is we make sure that we fully underwrite that application as if we are the bank. So when I said earlier we have access to 75 different financial institutions, I almost feel that I work sometimes for those different 75, and I have a hat for each bank, an imaginary hat, but I have a hat for each bank, and I'll try and fit the clients, with the best terms and the best rates and a solution that meets their financial goals and needs. And if I can't meet it, then we move on to the next one, right? Until I say, this is your options, right? When I speak with my clients, these are your options. Now you can go out and start shopping. Which homes do you want, or are you comfortable going and looking at, right? And then at that same time, when they want to put an offer in on, I always say, okay, Vishal, send me the listing to my email and I'll look at it before the client makes an offer. That way they're making an offer with a lot more education. Especially if they're a first-time buyer, they're not going to be as nervous or scared to make that offer because I've given them, that green light that everything looks good. And if they're in a case where, maybe qualifications are pushed to the absolute maximum, let's throw in a condition of financing, right? Just to give a little bit more protection. And you can speak to it too. We've seen a lot of condition of financing coming back.
Yeah, it's already there since last year. Since last year, the home inspection, financing, those are there now. It's normal. So I know we talking a lot about the process, relationship and all that stuff. And time changed pretty quickly in this world, right? And like now it feels like, we are in supersonic way going, how we're living our life, and things change in just a click. COVID happened, right? Nobody thought about that. It's going to go, market going to go that crazy when people not going, and a lot of people were not getting paid even, and market go
lots of job loss,
time. And it was strange, everybody was in the shock, and when it's happened, a lot of people who are not doing anything, they jump into the real estate business. They want to look into good money, and even in the mortgage business, right? And they jump over here, and now after a year of 2 years of that craziness, when it settled down, people struggling how to do their business because they were never seen this kind of thing, never seen this kind of interest rate hike. So what is the current state of the mortgage right now?
It's such a loaded question, but I can do my best to kind of summarize it, right?
Yeah.
If I can be honest,
Yes.
and you know, I don't know if some mortgage agents would agree with me, but it's a little crazy,
Yes,
right?
is.
If
Yeah.
just being fully transparent, which I think is one of the biggest purposes of this podcast is to open up, you know, the doors to transparency. It's a little bit crazy, but it's important to have some great people that you can work with to help manage that craziness. I think that there are still a lot of really good opportunities that exist. I'll be honest again, I had one lender release a promotion today where they have a really great rate available. And it's the first time that I've seen any sort of rate decrease almost or rate promotion in the last little while. So this is, I think, is a really, really good sign. Of course, we just saw BOC did not increase interest rates for the first time in a while, which is nice, or at least, you know, over that crazy sort of roller coaster that we saw. So that was a really, really good sign. Another announcement coming out in October. And then another one in December. So those will be really, really key to keep an eye on.
Here's my question to you. And I was assuming, like, because when they halt the rate, spring market was there as well.
Yeah.
And market started going up again.
The same, yeah.
Right? Even the interest rate was high.
Yeah.
Do you think that's still going to happen, that kind of stuff, like in October, because now they put a halt for a little bit?
I'm seeing it now. I'm seeing it now in the sense where, because we have a lot of different partners in a lot of different areas. I had a partner in Durham region who did an open house yesterday on a Sunday, and she had, I think, 20 plus attendees to the open house. And it, you know, of course, you can never gauge until you have offer night, but sounded like a lot of them were very interested in the home. I had another client that was in multiples not too long ago.
I just sold. I just sold this Friday. I just sold this Friday, and I don't do that like usually. Underpricing the listing. Right. So that's to attract more buyers
for sure.
But no matter what, anything above like 1.2 is like a lot of money. Right. And I have 15 on one day on open house and only 10 on it. That's also on long weekend.
Wow.
That's
usually
also on the long weekend.
Leave the city, right?
Yes.
You won't have a lot.
And after that, like, you know, I got like 30 showings within a week, and then I end up like with multiple offers, 5 definitely. Some of them like a low ball because that's the price they were looking. And the funny thing is, like, you know, when I look into the realtors and they ask about that, what your client going to take? And I was like, sky is the limit. Bring it on.
Yeah, I know. Exactly.
Bring it on. Bring it on. And they will take it. But the question is, like, you know, you have to talk to your clients, like what your, and I asked this question to my buyer agents as well. Did they qualify? Did they talk to a mortgage guy? Because it's important, right? Especially in this market.
You don't want it to become a waste of your time in the most respectful way possible.
Exactly.
Of course, you want to still take that client out, help them find a home, but are we looking in the right area? Are we looking in the right budget? You know, what is going on? So just to recap, I think that the state of the current mortgage environment is very strong still. The Canadians have shown that they're very resilient. I know delinquency rates are still not ridiculously low. Once we start creeping into 2025, are not very high. But once we start getting into 2025, we might start to see some changes and some shifts. With
so do you think, like, you know, next year, 2024, we're not going to see some rate drops?
Oh no! So if we look at projections, right? So what we did at Vine, and we can even share it with anybody who wants to see. We have a really great executive commentary that we released for August.
Well, it's great to have, like, you know, probably we're going to have a link, and we can put in our podcast, in our YouTube channel as well, which they can click and they can go and connect with you.
I think it's really important. Even if you just take a read of the commentary that we did, and it broke down a lot of the big banks and what their predictions were for interest rates, all the way up until I think it was end of 2025 or 4. But regardless, so what a lot of economists and forecasters are expecting and seeing today is the first decrease coming around Q2 2024.
Oh, really?
Yeah. So
and that's changed actually, because I remember they were saying the third quarter.
Yeah.
And it's that changed.
Yeah. So I would love to see that. I think it would give a lot of confidence back to the consumers. And let's be honest too, there's a lot of clients that are sitting on the fence.
Oh, they are,
And the way that I look at it too is think about all the first-time home buyers who just shut down during the pandemic, right? There was a lot of people that took advantage of some great opportunities there, but there were also a lot of people that just weren't really interested in getting out. So those people, unfortunately, missed out on the very, very low rates, right? But they're still looking to purchase homes. Then comes time when rates are going up. Now they're not going to purchase homes because rates have come up a little bit. So the way that I think about it is that there's this massive backlog of first-time home buyers dating all the way back from end of 19 to 2020 that are just waiting to come and to jump off the fence, right? Is the easiest way to say it.
So somebody was asking that question, and I was doing my tips. I do like the 3 tips. Yeah. And I was thinking, I don't think buyer never win. In terms of when they were in the market, when market was going on, they have to put 50 offers probably to get one.
Yeah.
And then what happens when they start coming down, just like mentioned, a lot of people, they got on the sideline and say perfect market, I'm going to do it. Guess what? It's a year past, they didn't even purchase yet.
Exactly.
Right? Because they just want to time. That's the hardest part to do.
Yeah.
And I always tell my clients and everyone that it all depends upon when you ready, market is ready. When is the right time to buy? Yeah. I don't think anybody has that answer. Mm-hmm. The only answer I can think about is when you're ready, when your finance is in place. Yeah. If you have to live, you're going to live. And thing is, mortgages usually are 4 to 5 years.
Yeah.
What happened in 4 to 5 years? Things, even nothing matter by that time. Mm-hmm. People when in 2017 with the craziness going on.
Yeah.
And people say, oh, I bought it. I know some of the builders, they 100,000, 200,000 short.
Yeah.
Because appraisal was not coming.
Yeah.
And then same people were laughing in 2022.
Yeah, exactly.
Right?
Exactly. That's a really great way to look at it.
So every 5 years, that's what's going to happen. Mm-hmm. And also depending upon what your goals are, right?
Yeah.
If you're just thinking of buying, and selling it, just to make a quick money or pre-construction, it's a different story.
Yeah.
But also, when you're looking to the 5 years, you're going to live in that house. My first question is, how long you want to live in this house?
Yeah.
Right.
Yeah, and that's one of the first questions that we asked too, because it could make the difference between somebody, again, not thinking about current state, but getting a variable mortgage for 5 years or a 5-year fixed term or getting a 1-year fixed term, right? But just kind of going back to that topic of people kind of sitting on the fence post, I think that from an educational perspective for the viewers that are listening and watching this today, it's important to understand that there's a statistic that I read, and I don't know how true it is, but it sounds like it's going to be quite true, is that 2025 will be, I think, either the second or third biggest year from a home sale, like a transaction in history, in Canada.
Wow.
Which means that there's going to be a lot of competition, right? Yeah. So I get the question all the time, and I'm sure you do too, is now a good time to buy?
Yeah.
Right?
Exactly.
Which I think is a really important discussion to have.
Right.
I still think it is a great time to buy. And we've spoken about this, and I'm sure that there are some viewers that have heard it from other people, but I like to think Vine coined the phrase first, but it's date the rate, marry the home.
Yeah.
Right? You're dating the rate, and it's a short-term thing. You're not married. You're not in that long-term relationship. You just need that period of time for as long as you need it, right? The home, you're going to marry that home because you love the home, right? You want to keep it for a long time or keep it for however long you'd like to keep it,
right?
So by looking at it from that perspective where, you keep that home for as long as you want, you can always refinance it down the line when interest rates have corrected themselves and we're in a bit of a more balanced market.
Right.
Even though you're paying, slightly higher premium for today's interest rates, it's not forever.
Way higher.
It's not for, of course, but it's not forever.
Yeah.
Right. Let's think about an example, and this is a little trick, and I'll give a tip without giving too much away.
Well, I'm all ears.
So we have a lender right now, and I've been executing this strategy on quite a few of my clients' applications, where they will allow for a 6-month early renewal. So if you take a 2-year term now, you can renegotiate your terms in 1.5 years.
Right.
That 6 months, given the interest rate environment that we're in today, could mean a massive difference in terms of basis points from an interest rate perspective, right? So again, there's all these little things and tricks that you would never really know if you're just asking the basic questions like how much do you make a year, where do you want to live, and how much money do you have for down payment, right?
You have to dig deeper, right?
Yeah, absolutely have to, right? So there's these clients that, are very, very happy. I think that a lot of them are going to be able to take advantage of that 6-month early renewal where they can change their rate a lot sooner than they would have been able to with another lender, right? And those clients that are open to these types of strategies, and again, it's not your average thing that you would do with every client, but clients that are interested in learning more about different ways to diversify their real estate portfolios are the clients that I love working with, because then I can get creative and I can get very invested into that relationship, and it becomes fun for me if I'm being completely honest with you.
Yeah. Well, I know we talk about the good things, and I love to talk about the grim reality, like what people feel, what media tell, but also there's reality, for in some cases people not able to afford their houses, right?
Yeah.
Affordability is even the rental market is so crazy, and I'm just watching a TikTok and Instagram and people posting that I'm leaving.
Yeah.
I'm crying. People are crying that I cannot afford it.
Yeah.
I'm a single mom.
Yeah.
Have to pay $3,500 for, and I make only $60,000. How I'm going to feed my kids?
Yeah.
It's a sad part, right?
Yeah. Oh, of course.
So, how the interest rate impacts mortgage options and affordability?
Yeah, it's huge, right?
Yeah.
Let's compare where we were pre-pandemic and where we're at now.
Yeah.
Or even during pandemic when we were seeing interest rates as low as 1% or below.
It's like a free money.
Exactly. We're qualifying clients based off of the benchmark rate, which I think at that time was 5.25%, or it still is. You're at 5.25% then, qualifying rate, right, with the stress test. And now we're at contract rate +2, right, which is what the stress test is.
Exactly.
Contract rate today, again, call it 7% for a 1-year term.
Just 9% they have to qualify.
Comparing to 5.25% before.
Yeah.
Massive difference.
Right.
People, there's going to be situations where I don't think that people will be able to afford their renewal payments.
Yeah,
right?
with a lot of refinancing coming in.
So there will be a lot of refinancing coming in, a lot of selling happening, right? And so some strategies, let's talk specific strategies.
Yes.
At the beginning of pandemic, we were doing a lot of restructuring of mortgages for our clients. And when I say restructuring, I mean, obviously the money's still there. The money still needs to be repaid.
Right.
But the way in which it does get repaid changes.
Yeah.
So specific example was we had a client that had a $500,000 mortgage.
Yeah.
And they were like, okay, I see my payments are going up and up and up and up and up. I don't know what to do.
Right.
So we moved a portion of those payments, and in some cases you can do all of them, into a line of credit that's still secured to the home. But instead, for a short period of time, you're making interest-only payments. So that significantly decreases your monthly, liability,
right.
And it helps with cash flow.
Yeah.
In a market and an economy where people really need to save as much money as they can, this option allowed them to do that. Now, when we see interest rates climbing and climbing and climbing to where they are today, that option does become a little bit more tough, right?
Yeah.
But there are some other clients, right? So if we're talking specifically about a qualification perspective,
right.
There are some clients that I work with that we have only ever looked at a credit union for their application.
Right.
And credit union is because they're provincially regulated, not federally regulated, so we can get rid of that stress test completely,
right.
which is huge.
Yeah.
Right? We're talking about a full 2% that we're eliminating from the qualifying rate, right?
And what's the difference? How much, just give an example to our viewers and listeners, 2%. How much, I know, remember before we used to calculate at $450 and 100,000 mortgage, right?
Yeah.
So what's the rate going on right now?
It's different. It's case by case.
It's probably like 600 something. Yeah, 600, 700.
I was going to say about that. Maybe a little less.
Yeah.
But at the same time, I've taken advantage of credit union relationships and partners a lot over the last little while.
Right.
And it's allowed my clients to purchase something that's in their desirable neighborhood,
right.
if they're able to make the payments, instead of needing to scale back their desires, right? Instead of looking at a condo, maybe now we're looking at a detached or a freehold home, or detached, semi-detached style home, right? Which I think is awesome, right? Because I have a lot of clients that say, I don't want to be in a condo, I don't want to do this, and those are the clients that I'll look at, some of the different options for them. So
but it's difficult, like, and then I'm going to have more emphasis on this one over here, because a lot of people are struggling. I know, like, they also from 25 years to 30 years to 50 years, and even heard somebody's doing 100 years.
Yeah, I've heard of infinity amortization.
100, like, how bad is that, or is that okay?
Yeah, so it's not going to be good for a lot of clients,
right,
who are going to be trapped in those. Like, I think there was a case that I read. A client looked at their amortization in amount of years remaining, and it was an infinity symbol. You know how intimidating that would be to see an infinity symbol in your amortization schedule?
Absolutely.
Right? So, yeah, I think it's very dangerous to have those types of options available, right? But that's why right off the bat, for those clients, they need to speak with somebody, either the bank, or they should be getting a second opinion from a mortgage agent immediately, because there could be some solutions that exist, and you don't want to have it go to a point where they've passed, the boat has sailed for some of those options.
Right.
You want to make sure that you have as many options as you do available. So I think one of the biggest things a lot of the viewers and listeners can take away from this specific podcast, or episode rather, is to reach out and get that second opinion.
Yeah.
To us, it's 15 minutes, right? But to them, to clients and to viewers, it could be the difference of saving lots and lots and lots of money.
Absolutely.
Right? And it's not necessarily your job to know which solutions exist, right? That's what we're here for, from an educational perspective, so that, if you see an infinity symbol in your amortization, like, I laugh, but it's scary.
Yeah, it is.
You need to talk to somebody right away. And come up with a solution that would make sense for you. And I wish I could say that this is the answer for that, but everybody's solution is different, right? One situation that I had come up where I had a single mom.
Right.
Couldn't make her payments, bought when things were, she bought very low and had a renewal come up. And so, what we did for her was a reverse mortgage, where we eliminated the need for monthly payments. And it's only a short-term solution, right? I think a lot of people look at reverse mortgage without having a full podcast about reverse mortgages.
Oh, for sure. And I was going to say that, because we were talking the other day over the phone, and we were just discussing coming out, what questions and what we want to do. And then just mine was falling and there's so much to educate people. So much to provide value to our listeners and people who are watching. That we cannot cover in just one podcast. So it's going to be a series of podcasts. Who knows, Tyler will be here every time, every Monday, to record that. So we do record our podcast on Mondays, and then we release a subsequent Monday. We release it. So this one, when you're watching, it was already recorded. So now, a little bit more about that, people, what other solutions are available? We talk about that, having that reverse mortgage. We talked about, different options which the other banks provide, using different banks, credit union. Those are the options over here. Most of the people are paying the interest right now. Nobody is making equity in there. What other things? What other options are there?
No, there is, and it's something that we've done. And this is more specifically for qualifying as opposed to mitigating payments. Because let's be honest, it's very difficult to reduce your monthly payment. It's unless you get to a point where you unfortunately would have to sell your home. Right, which is a case of a lot of Canadians.
But surprisingly, thing is when I'm looking into that, I go in the market and I was saying everybody's out, everybody's going on vacation, everybody's doing it. And I said, when it's come to only people crying when it comes to payment for the home.
Yeah, it's true.
But not on the other thing. So do your financial analysis, and we're going to have a financial analyst in our podcast as well to give you those ideas how you can manage your money and how smartly you should cut down your unnecessary expenses, right? Like, probably you have like some subscriptions which you're not using even, and you're paying for it. Small amount. That can save you a lot of money.
Absolutely.
So we're going to have that, and that's a different episode.
But looking at qualifications itself, we've utilized, and I think that we did a presentation at your office about this, was utilizing alternative style lenders.
Exactly.
Or as many people call them, B lenders, right? Where before the pandemic happened, if you were talking to a client that thought that they were going to get a mortgage from a bank and you said, we should look at an alternative style lender, it would be like, oh my gosh, that's the worst thing I could have ever heard in my life. But I'm very proud to now say that a lot of, at least my clients, have developed an understanding and education that if you have to go with a B lender, it's a means to an end.
Yes.
You're not there forever, right? No. And another thing too is that sometimes it can be a personal thing, but nobody knows. Nobody needs to know. And there's nothing wrong with being with an alternative lender if it allows you to tick off those boxes that's on your list of goals for that year, right? We had a lot of investor clients that were having a hard time qualifying for those purchases that they've made over the last little while.
Right.
For those clients, we went to an alternative style lender where we can recognize more income per month.
Right.
We can extend our qualifications beyond what lenders' maximum is. Like, we look at TD and Scotia, CIBC and all those lenders, they're going to be pretty strict with where they want to see qualifications. On exception, you can sometimes get higher, but that's a whole other conversation. But looping it back to investors, a lot of our investor clients took advantage of those alternative style lenders, and we're only putting them in for 1 year term so that we can do another review of that portfolio in 1 year. As an investor client, the goal is to obviously hit your own goals, but you might want to sell a property. And in 1 year's time, you have the ability to do that by taking a shorter fixed term solution, right?
I think, that's what I'm going to ask you as well. Like before it was like a lot of investors, a lot of first time home buyers, but also people who wants to invest, and they did during the pandemic. And I think the advantages they have, because they have the equity in the house, they can take it out, HELOC and all that stuff, and they can buy, and that's why the market was going crazy. I think what I'm trying to get into is those money power, but now it's not happening. So investors, a portion of those investors, it is reduced.
Well, yeah, for sure. We're not seeing as many investors as we were seeing, during the beginning of the pandemic or even well before the pandemic, right? But there was still a lot of them that were taking advantage of that strategy. Just to finish off that quick B lending strategy. So if the client takes that B lender for 1 year, we can move them to an A lender when rates have come down. Or maybe they do a 2 year fixed term, right? So those solutions existed. And for those clients that took our advice, they were able to go and purchase those homes. And it's the same date the rate, marry the home style strategy, where you're taking advantage of the potentially lower home price for now, buying that house, and then maybe in 2025, you've made X $100,000 on that home because you purchased when prices were significantly lower, right? So...
there's all kind of options available.
It's
Seems
insane.
like, he has a lot to offer, and it's like a one shop for all your mortgage needs.
I think we need to do a 24-hour podcast. We just don't sleep.
Probably
right?
did do the live, right? I will make
exactly.
make the world record. There's any world record for a longest podcast live? Maybe we'll find out, and
we'll break it.
We will break it. Anyway, we have to keep on moving over here. Do you want to take a break a little bit, or that's right? That's okay. Are you good to flow? Yeah, should we flow? We go okay? All right. All right. We did. How much we did? Okay. So we have. So coming back to qualification, what factors do lenders consider when approving a mortgage?
So the biggest thing is, of course, income. Right. But I laugh because I always try to get as creative as I can, right? Income doesn't have to just be letter of employment, your salary on that letter, that's what we're going to use, right? And sometimes my lender partners at the banks might get a little bit annoyed with me because I'm always trying to, push the envelope of creativity and saying, yeah, sure, that's what that says, but I've got a stack of paperwork that supports this, and this, right? And there's a lot of opportunity for me as a mortgage agent to get very creative when dealing with income, right? So income is number one most important. I think that they're going to look at, and there's so many different ways that you can present income to a lender, as opposed to just submitting the documents and saying that this is it, right? If the client needs to qualify for a little bit more, let's dig back and let's really look back. Like I've had to go back years of documents from a request perspective for my clients to help position the income in a more favorable way. And we were actually able to do it, right? So it sometimes can be a bit annoying on the client's perspective, perspective. But
what are those? Like, are you allowed to spill those secrets?
No, for sure. So one big one is bonus income. Right? Okay. If you've just started a new job, it's very difficult to use the bonus income that is expected from that role because banks will want to see a 2-year average of your T4s from that employer in order to use the bonus income. So for the clients, again, that I can try and help out if I can, I'll take that salary and we'll see if there's been a bonus that's been paid, even if it's only been 1 year. I can try to get creative and perhaps use a portion of that bonus income to help bump up. And sometimes that bump, with clients that are half salary, half commission, or half, they get a very, very large incentive.
A lot of
portion.
Salespeople have the same thing, right?
Those are the clients that
they get big bonuses.
Exactly. And I don't want to have to
sometimes it's so much so like it's equivalent to their salary, actually.
Oh, 100%. Right. But I don't want to have to say to those clients, come back to me in a year.
Yeah, for sure.
Right. Because I'd try to help them now. So yeah, like I said, there's different ways to get creative. And the same thing with income for self-employed individuals.
Yes.
Like I said at the beginning, there's
the T4s,
the tax returns is typically what you're going to see. You're going to see notice of assessments, T1 generals. Exactly. They're going to take the 2-year average of your tax returns, and that's typically the most average and basic way to do it. There's different programs that lenders have where if you're incorporated, we can use significantly more income from the business, right? And there's only a handful of lenders that will allow you to do that. Another one is, so qualification perspective, I might be getting a little bit off topic here, but it all comes together, is there's a net worth program, right? Where if you have significant savings to your name, outside of real estate, or even sometimes including real estate, they will top you up to qualify for a much more amount based on using those assets and investments as mitigation for having extended qualification ratios, right? And it's a program that people might not even know exists, right? For younger individuals who have perhaps a very large inheritance. If they're just starting out in the job force, right? Maybe they've just graduated university or they're a couple of years into their job. They're making, not the most amount of money that they'll be making down the line. We can use these types of programs to help qualify significantly higher. So coming back into qualifications, income is important. And again, I could have my own podcast called Income and sit there and talk about it so much forever. About that, but another one, of course, is liabilities, credit bureau, right? They want to see your spending. They want to see your debts. Right?
Exactly. And that's so important because I know like a lot of people have those habits which they don't realize. They think the credit card, what they have is their money, which they can use, and they don't pay it and doing the minimum payments. Like that's the worst thing can you do to your credit actually. Banks offer them because they want to be hooked up there and they can do more interest. I know I'd never in my life happened that I missed my payment. I use my credit for build up my credit, 800 plus. So I don't have to worry about anything. And that's what I taught my daughter as well. The same thing. I'm like to make sure, borrow the money, but make sure you're only borrowing the money that you have somewhere to pay from. Don't live paycheck to paycheck. Do some savings, do some smart savings. And there's a solution because, and that's why important I want to talk to our financial planner friend is educate people to do that because if you have that education, no way that scenario is going to come out that
of course
they won't qualify. It doesn't matter like how low income you're making. You're making minimum wage, even like a $15, and you can do savings.
Just don't spend beyond your means, really.
Don't spend beyond your means. If you're going to have that latte or even the coffee outside, you can have at home. Buying those avocado sandwich. You can get that much cheaper at home, right? Those sandwich. The other day, who was listening to O'Leary guy?
Kevin O'Leary?
Kevin O'Leary. And he was saying exactly the same thing.
Yeah, I watched that too.
and the sunny, like these days, like with Instagram reel and stuff, like the shorts come in, and it's probably coming on the other people's feed as well. And when he's saying that, it's reminded me, I'm from India, from back, and we have been brought up like that. We've been brought like that without savings. I never heard about the credit like until I came over here, honestly. It was starting, like I came 23 years ago, and it was starting over there, and it was hard to get the loan over there. It was hard to get loan, but now things change over there too.
For
like
sure.
It's everything is different. But yeah, the whole idea was like, have those basics. And that's what I tell my wife. She's a teacher, and I also involved in the school councils and stuff. And I was looking closely at education. Two things they don't teach, which is the most important thing. First is the communication. They don't teach that. And second is how money works. Right? Imagine, like, if we give that education since the childhood, grade 2, grade 3, how to do savings, how to spend, and they can, various things they can do to educate.
Introduce some programs for those later folks in in high school.
Yes.
About mortgages. Like, let's talk about mortgages.
Let's talk about that
with the Canadian youth, right? They're going to be the ones that are applying for these mortgage applications and speaking to me. Right. Hopefully, there's a long line of gray hair that I'll have when I speak with all those folks. But yeah, no, I think that we need to educate our youth today,
for sure,
because selfishly, it'll make my job easier. When they come and talk to me, they'll already know what they're prepared for. But seriously, though, it really will make a difference, because I bet you right now, if you were to walk into a high school course just down the road from here,
I have no idea.
No clue.
No idea.
It's sad.
Forget about that. Like, this is so bad. I used to work in a retail management. I used to hire the cashiers and I it was mind-boggling.
I can imagine.
A smart kid. And can do the smart things, but when it's come to calculation, if I give $20 and I said I give you $13.75, give me the rest back, they cannot. Okay, they cannot, without looking on the screen, they cannot give you that money. And when the light, like a load shedding happen or something, and the till is not working and have to do the manually, guess what? There was a huge lineup over there because they can't calculate. And I say, like, it's mind blowing for me that how the education system, like, not teaching. And I think, like, a big lowest thing is, like, a few years ago, it was there was alarm that so many kids, like, they don't know math. So yeah, this is like,
I bet you any money that if you did go into one of those, you ask them, what is a mortgage?
Yes.
No answer.
Nobody knows.
How do you buy a house in Canada?
No.
Just buy it. Okay.
Just like somebody saying, like, I remember the one kid, like, where the food come from grocery store.
It's the same thing though, but yeah. I know. It all ties into my number one thing, which is education, empowering people with knowledge so that they can make those educated decisions that are gonna, be where they potentially live. Could be for the rest of your life.
Well, for sure.
Could be a decision that you make that is going to allow you to sell and maybe come out with a couple $100,000 extra in a couple of years, right? Like, there's lots of different things. But yeah, education is so incredibly
such an important thing. And also, like, you don't just have to rely on school. Like, a lot of things which you can teach at home. And we just, like, say, the kid, let's get to school, that they get educated over there, and we don't give them time. That's important that you teach them at home. You start from here. It's okay to not to have a iPhone. It's okay to not to have branded clothes. You can do a lot of saving, right? But anyway, like, we're just going on to more the education part, like, and not coming back to mortgage over here. There's so much mortgage wisdom, we have to share it with you. Unfortunately, it cannot fit in just one podcast. So we're doing a next section and part 2 of this podcast for your mortgage wisdom. So keep watching, and please do subscribe to our YouTube channel, Apple Podcast, or Spotify, and keep loving us. Thank you. Bye for now. Disclaimer: the information provided in this podcast is for informational purpose only and should not be considered as financial or investment advice. Consult with your professional before making any real estate decisions.